It looks like we are now live for our attendees. Thank you all for joining us today for Congresswoman Norma Torres' stimulus and tax preparation webinar. With the new tax deadline of May 17th, some of you all may have questions about tax preparation, about stimulus checks, and how you can navigate that process with your family. So we do have a range of experts here with us today that will give you updates on their respective agencies and the work that they're doing to obviously help folks get their tax returns filed and prepared on time. So with that, a couple of housekeeping reminders. If you do have any questions throughout this webinar, feel free to submit them in the Q&A portion. We will try to get to as many of those, if not all of them, as we, as many of those as we can, if not all of them, during the time allotted. And we have obviously experts on hand to help answer those questions. With that, I will turn it over though to Congresswoman Torres, who will give an update on Washington and her work in Congress in terms of tax preparation and stimulus relief. Congresswoman.
Thank you, Jacob, and good afternoon, everyone. It's great to see you joining us today for an important conversation to help navigate this tax season. I want to take a moment to express my appreciation for the tax experts who are on this seminar with us today. Annabelle Marquez, a familiar face in our district from the IRS, is here to discuss federal income impact payments and tax deadlines. Lila Fedler from the California Franchise Board, I think Mark is from the Franchise Tax Board, here to talk about the Golden State stimulus checks as well as state filings and credits. Yanshu Zhao is joining us from the Cal Poly Pomona Volunteer Income Tax Assistance Clinic, also known as VITA, a program to discuss free tax preparation options. And Susan Meyer from the California Alliance, also a very familiar face in our district. It's the California Alliance for Retired Americans, to discuss the economic impact payments for seniors. Before I turn the floor over to our experts, I'd like to take a moment to discuss how Congress is working to help you and your family through this pandemic. COVID has changed our lives in dramatic ways, and while we're making great progress with improved cures, new vaccines, and social distancing, there are still important challenges to making ends meet. That's why we're here today, so that there's a bit of information about my work on behalf of our community. Just want to share with you that to date, I've announced more than $579 million in COVID relief for the Inland Empire. That money is helping to keep small businesses afloat and workers on payrolls. It is funding vaccine distributions. So as you go around our community and you're seeing the vaccine facilities all around town, those are your federal tax dollars at work. We're also keeping emergency responders on the job. It is why we sent money directly to our municipalities and our states. Something of particular interest for parents, it's helping us reopen our schools. The vaccines are so important to ensuring that we're able to reopen our economy. Our children need to be back in their classrooms with their teachers and giving mom and dad some well-deserved peace of mind. Perhaps the most popular form of federal relief has been the economic impact payments. Congress delivered checks of up to $600 for every person, man, woman, and child included in December. And we recently delivered an additional $1,400 per adult and child in the American Rescue Plan. 160 million people received these checks. That's about 85% of all Americans receiving a boost in their bottom line when they needed the most. There are other changes that have taken place at the federal level too, including an expansion of the child tax credit that will help tens and thousands of families in the Inland Empire. And this is the second year in a row that the tax deadline was delayed from April 15th to May 17th this year. So you have about a week and a half to file your federal taxes, and the experts joining us today are here to help you do that. With that said, I'd like to turn the floor over to our first presenter today. I think Jacob will help me introduce them.
Definitely. Thank you, Congresswoman, for that update. So our first speaker today is Annabelle Marquez with the Internal Revenue Service. She's here today to give an update, obviously, on economic impact payments and those stimulus checks that have been going out to our constituents, as well as, ongoing changes to, federal tax guidelines with the new tax filing deadline. So Annabelle, can you give us an update on where we're at with stimulus checks and tax preparation, tax filing?
Sure thing. Thank you, Jacob, and good afternoon. I'd like to thank Congresswoman Norma Torres for this opportunity to share important IRS information, especially now, as she mentioned, we're getting very close to the tax filing deadline, less than 2 weeks away. So as many of you know, the filing season opened on February 12th, and the IRS extended the filing deadline to May 17th this year, again, leaving us with a little less than 2 weeks to go before May 17th. As a reminder, if you haven't yet filed your taxes, we highly recommend that you file electronically so that you can avoid refund delays. Not only is e-filing the safest and most accurate way to file a tax return, e-filed returns have fewer errors, and of course, that means fewer delays. If you e-file and choose direct deposit, that's the fastest and safest way to file an accurate income tax return and receive a refund. Speaking of refunds, most refunds are being issued in less than 21 days, although some are taking a bit longer to process. For example, if a return includes errors, if a return is incomplete, or if it's affected by identity theft or fraud, if a tax return includes a claim for the 2020 recovery rebate credit, and the IRS needs to verify any amounts previously issued as a first and second economic impact payment, that may delay the tax return processing. But the IRS will contact individuals by mail if additional information is needed to process a tax return. The Where's My Refund tool on irs.gov remains the best source for information on the status of a refund. This year, we expect to process 160 million tax returns, and this is happening while the agency continues distributing the third round of economic impact payments, as the Congresswoman mentioned, as approved by the American Rescue Plan Act of 2021. Further, as you also heard during the Congresswoman's introductory remarks, we're gearing up to issue advance payments of the new child tax credit. There have been important changes to the child tax credit that will help many families receive advance payments beginning this summer. The American Rescue Plan Act expanded the child tax credit for tax year 2021 only. So under the prior law, the amount of the child tax credit was $2,000 per qualifying child under age 17 at the end of the year. But for tax year 2021, the amount increases, and people claiming the child tax credit will receive up to $3,000 per qualifying child between the ages of 6 and 17, and $3,600 per qualifying child under age 6 at the end of 2021. The increased amounts are reduced or phased out for incomes above $150,000 if you're married filing jointly, $112,500 if you're a head of household, and $75,000 for all other taxpayers. Now, advance payments of the 2021 child tax credit will be made regularly from July to December to eligible, July through December, to eligible taxpayers who have a main home in the United States for more than half the year. The total of the advance payments will be up to 50% of the child tax credit. Advance payments will be estimated from information included in eligible taxpayers' 2020 tax returns or their 2019 returns if the 2020 returns are not yet filed or processed. So the IRS urges people with children to file their 2020 tax returns as soon as possible to make sure they're eligible for the appropriate amount of the child tax credit. Now, eligible taxpayers do not need to take any action now other than to file their 2020 tax return if they haven't yet done so. Also, eligible taxpayers who do not want to receive advance payment of the 2021 child tax credit will have the opportunity to decline receiving advance payments, but more details on how to take these steps will be announced soon. This information is fresh off the press. We are just publishing these new guidelines regarding the child tax credit and how that will play out. We encourage taxpayers to visit our website, irs.gov, for all the latest information related to COVID-19 tax relief. Information about your stimulus payments can also be accessed through our Get My Payment tool on irs.gov. And of course, the Where's My Refund tool helps people find out the status of their tax refund. Now, I know many of you probably have questions about economic impact payments, the recovery rebate credit. I'm happy to be here today to answer as many of those as possible. Thank you.
Great. Thank you so much, Annabelle, for that update. Obviously, lots of relief coming through the American Rescue Plan that Congress passed. So I'm sure there'll be a lot of questions about how that all will work and play out. And we'll get to those at the end of this webinar. So next up, we do want to move it over to Mark Narleski, who is with the California Franchise Tax Board. And he's here just to give the state tax perspective and what can be expected with state tax preparation this filing season. Mark?
Thank you, and thank you, Congresswoman Torres, for this invitation. Oh, this is just a slide with some resources, but what I wanted to talk to you today is a little bit about California's taxes and some of the new programs that the Franchise Tax Board is administering. First of all, consistent with the Internal Revenue Service, the Franchise Tax Board has extended their filing deadline and to include the filing and payment of taxes until May 17th. So this postponement applies to the individual filers whose 2020 tax returns would normally be due on April 15th. And it's an automatic postponement, so there's no need to contact us or call our 800 number. It applies to tax returns and payments only. So if you're in a situation where you make estimated tax payments, those are not included. It is important for me to mention that federal economic impact payments are not taxable for California income taxes. So you don't have to pay tax on those federal payments. Also, California has the Earned Income Tax Credit, or CAL-EITC, and hopefully you're already aware of it. And I'll be happy to answer some questions about that as time allows. But really what I wanted to talk to you today about was the Golden State Stimulus payment, and that's allowable for those who qualify. It's a one-time payment of either $600 or $1,200, and it is a payment per tax return. So you may receive the payment if you filed for CAL-EITC, or if you file using an individual taxpayer identification number, or ITIN as we call it. For most Californians who qualify, you don't really even need to do anything. It is based on the filing of your return. So the qualifications are, well, you're going to have to file that 2020 tax return and then be either a CAL-EITC recipient or an ITIN filer who earns less than $75,000 total California adjusted gross income. So I've mentioned the CAL-EITC and ITIN previously, but there's some additional requirements. And you have to live in California for more than 6 months of the 2020 tax year, and then be a California resident at the time that the payment is issued. And then, of course, you cannot be eligible to be claimed as a dependent on another person's tax return. So otherwise, it's a fairly automatic process. So if you qualify and you haven't filed yet, then you'll receive your payment 45 to 60 days after the processing of the tax return. Realistically, for an electronic filed return, which the Franchise Tax Board also recommends, it will take a little over 2 months to receive that stimulus payment. And then for the paper returns, it will take just about 3 months to get that payment. It's a new program, and we've already sent out checks starting on April 15th, and we've sent out over 2.5 million payments to recipients to the tune of approximately $1.6 billion. So it's been a pretty successful program thus far. And we do expect to be issuing many more. You'll generally receive a payment in the same format as requested on your tax return. So if you have a direct deposit request for your refund, that's how we'll issue the payment, or it'll be issued by check. And then for those folks who filed using a tax preparer and there was an advance refund involved, those individuals will be receiving a check as well. So, or their method of receipt is by check. Similar to the Internal Revenue Service or the economic income impact payments, the Golden State stimulus payment is not taxable for California income taxes. And of course, there's always a deadline. And California has an automatic extension for all their tax returns. Of course, you need to pay timely. That would be by May 17th for this year. But you have until October 15th to file and qualify or potentially qualify for the Golden State stimulus. So additionally, California, as I mentioned, has the Cal EITC. And for those who qualify, you must be 18 or older and have a maximum income of $30,000 for 2020. And the income must be subject to California income tax withholding. So a wage earner. And then self-employment income is also a qualifier. So you'll go to our website for more information on that, and I've provided that information for you. But in addition to that, on our website, we have what's called a Cal EITC calculator. So you can actually go to our website and estimate what your Cal EITC would be. But coupled with that Cal EITC is the Young Child Tax Credit. So if you have a dependent that otherwise qualifies you for Cal EITC, and that child or dependent child is under the age of 6, there is a credit of $1,000 for each qualifying dependent. And last, we have a free filing option called CalFile, and you can go find that on our website. Look up CalFile, or just under File, you'll find CalFile, and you can use that to complete a California income tax return. And with that, I will pass it on to the next speaker. Thank you.
Great. Thank you, Mark. I'm sure we will have some questions at the end here about the Golden State stimulus. So we're happy to have you on today. With that, we will turn it over to Yanshu Zhao, Cal Poly Pomona's Volunteer Income Tax Assistance Program. And she's here to talk a little bit more about the services that they're offering to local taxpayers to help them prepare their tax returns. Yan?
Yes, can you guys hear me all right?
Yes.
Hi, this is Yanshu. I'm the coordinator from Cal Poly Pomona, and I have been coordinating the VITA program for the last 5 or 6 years. So in the past, we normally would offer the program at the public sites like Pomona libraries. We also offered it at the Pomona's Boys and Girls Clubs. Due to the pandemic, this year we are offering wider program through Zoom. So our volunteers would all have a Zoom HIPAA, which is create more securities than the regular Zooms that we would use. So what we do is that we have this email at the email address is called polyvita@gmail.com, where the taxpayers would send us the email, and then we would let the taxpayer know when we can schedule them. Also, we would provide them with a Zoom link. So also prior to the Zoom meetings, we would contact the taxpayers with a secure password where we can create some sense of security. We know that we're talking to the right taxpayers. So on the date of the meeting, we would use the camera also wait to verify with the taxpayer's social security and the driver's license, again, to ensure that we are talking to the right taxpayer. And we will prepare the returns. So there is some, due to the pandemic, there's some limitations. Try to protect the taxpayer's information. Basically, we don't have any physical copy of the documents with social security numbers on it. So through Zooms, the taxpayer would show us their tax documents. And we would share the screen with the taxpayers of the tax software that we're using. We're using the one that's provided by the IRS, the tax layer. And on there, we're gonna input all the tax informations, etc. Also, we would ask the taxpayer to send us a consent. There's a form that's required by the IRS that we will need it from the taxpayer, which give us authority to prepare the tax returns virtually. So we would pretty much follow the procedures like we normally do in a face-to-face kind of settings. It's just that with this Zoom, there's added steps that we would take. And then we also we do e-files where we encourage taxpayers to file the returns through e-files. Once we e-file it, normally it takes like 5 to 10 minutes. We would get a notification, either the tax return is accepted or if it's rejected. So if the return is for whatever reason that got rejected, we have the taxpayer still on Zoom with us, so we can get it fixed quickly and resubmit it. If it's accepted, we let the taxpayer know that the return is being accepted. And in terms of send the return to the taxpayer, we create a password. Most of the time, it's the last four-digit social of the taxpayer. We put it in a zipped secure PDF file, and we email that to the taxpayer. So each step that we take along the way has been approved by the IRS's VITA coordinator. So also we are we're working like with the taxpayer closely if they need additional help with the Zoom, how to access to the Zoom. We can help them, give them step-by-step instructions in terms of how to log on Zoom and how to work with them. Because we can do it virtually, our VITA schedule become more flexible. Actually, we have VITA teams serve from Monday to Saturday. And the most weekdays are like in the afternoons when the taxpayers are off work. So that's what I have to share.
Great. Thank you so much, Yan. Can you repeat that email address for folks to email or to contact your VITA program?
Yeah, it's called Poly, CALPOLY, VITA, VITA @gmail.com.
Okay, thank you. And I also just put that in the chat for folks who may want to use their services. But we will also get to questions for you, Jan, as we move to the question and answer session later. But thank you for that presentation. Last but not least, we do have a presentation from Susan Meyer, who is with the California Alliance for Retired Americans, and she's here to give us a little update on stimulus checks and seniors and how they have been doing on that front.
So the seniors have been the hardest hit group by the pandemic. And thank you so much, Congresswoman, for having us be here today. You know, about 50% of married couples and 70% of unmarried persons receive 50% or more of their income through Social Security. The other way they bring in money for their income is through pensions, savings, and part-time work. So many companies used last year's negative economic impact basically to get rid of seniors and older workers. And now as the economy picks back up and seniors are trying to get jobs, they're having a hard time finding jobs to augment their Social Security. The kind of jobs that they're used to, the kind of pay and benefits that they had. So they have really been affected and they need those jobs in order to augment their Social Security. Also, our children have come back home, right? So we now have more to spend on food and our utility bills. So the seniors have really been impacted. And so this stimulus money is very important to them. So the stimulus money goes directly back into the economy almost as soon as it is received to pay these bills and other expenses brought on by this pandemic. So it is very welcome. The seniors needed this money. So now seniors now rely more on delivery services for food and other goods because of the pandemic. So this money, again, is turned right back to stimulate the economy. So seniors may need more in-home care now because they're not able or maybe still a little afraid to go to doctor's appointments. And so they may need to have services come. They may have to have physical therapists come to their home or other types of services that they would have gone out for. So all of these things are additional expenses, but we do know that the majority of the senior stimulus money is going right back into stimulating the economy. Thank you so much.
Thank you for that update, Susan. And I'm sure we'll have some senior focused questions for you as we move now into our question and answer session. Again, if you have any questions, please submit them in our Q&A section of the webinar. We will get to as many as we can. But first, I would like to turn to the topic that Annabelle discussed a little bit about, and I think is a huge part of what the American Rescue Plan did, and that is the child tax credit and the expansion that happened there. So I'm going to turn it over quickly to the Congresswoman. Congresswoman, if you can give a quick overview of what exactly happened with the tax credit in that recent legislation.
Yeah, so with the tax credit for the children, members of Congress really wanted to make sure that we were working towards getting kids out of poverty, which was our top priority, ensuring that the most impacted people in our community receive the money that they needed to get in their hands. So, Jacob, there isn't really much more to add on that other than this was our priority and we were committed, to get this done for you, and we got it done.
Yes, thank you, Congresswoman. And turning it over to Annabelle, you mentioned that these payments are going out from July to December. Can you give a little more of insight into how much an average parent can expect from those payments? I know it obviously depends on the age and if they qualify, but to clarify, are they going to be receiving a portion of that tax credit and then this year and then the rest on their tax return next year?
Yes, thank you, Jacob. That is correct. So based on the information that we have recently made available on our website that explains more or less how it's going to play out, the way the credit is going to be issued is up to 50% of the total credit that the person is eligible to receive. So for example, since it's going to be $3,000 per qualifying child between ages 6 and 17 and $3,600 per qualifying child under 6, let's say, for example, that you are filing jointly, you filed married filing jointly, that's your, that's your filing status, and you have 2 kids, one that's 7 and one that's 10. This new child tax credit would make you eligible for $6,000 based on the new amounts, because those children are between the ages of 6 and 17. What the IRS is saying is that if those $6,000 that you would get for both kids, because it's $3,000 for each, you will get up to $3,000 of those $6,000 this year through monthly payments. And so the way we'll calculate that is based on the information on your 2020 tax return, which will let us know how many dependents you have, their ages, your income, so that the calculation can be made and the payments can start distributing in the same way that you received a refund.
Okay, so if they received a refund by direct deposit, they would be getting that tax credit advanced through direct deposit, and then if it's by check, they would get it through check as well, similar to the stimulus checks?
That is correct. Now, because the IRS will only be issuing up to 50% of the eligible credit this year through these monthly payments, then when the taxpayer files their 2021 tax return next year, there will be an opportunity to reconcile and claim the other portion that wasn't distributed through the monthly payments.
Okay, great. Thank you for that insight. That's really helpful. We have another question here about economic impact payments and the distribution of those for folks who may have an outstanding tax burden or maybe child support. Can you give a little more insight onto what part of those payments are protected from that kind of collection? With the recent one that went out, what can taxpayers expect in terms of distributing that if they may have prior obligations in terms of financial burdens?
Sure. And thank you for bringing up this topic, because it can get a little confusing since the rules changed a little bit, from one economic payment to the next, and then they change again with the recovery rebate credit. So for the first economic impact payment, EIP1, the legislation stated that only for past due child support would those payments be reduced. In other words, the only type of debt that would have offset EIP1 was past due child support. So most people that had a past due child support noticed that their economic impact payment, which was $1,200, may have been reduced by its entirely or by the portion of past due child support that they had. Now, for the second economic impact payment, EIP2, the legislation then prohibited that amount from being reduced by any debt, whether that be federal or state. So those second EIP payments for $600 were not to be offset for any outside debt. Now, when it comes to the recovery rebate credit, so for folks that for one reason or another weren't able to get EIP1 or EIP2, perhaps the IRS accessed a return from a previous year where their income threshold was higher than the eligibility warranted. For folks that are claiming the recovery rebate credit for amounts not received under the economic impact payment, this is where it gets tricky. The recovery rebate credit is considered, a refundable tax credit with the same rules as other refundable tax credit, which means once you have the total of your refundable recovery rebate credit, that can be reduced, that can be reduced to pay federal tax debt. So if you didn't get your EIP 1 or 2 and you're claiming the recovery rebate credit, the recovery rebate credit is treated as any other credit, which is a reduction of your tax liability. For EIP 3, which is the one that's currently being distributed, the legislation says EIP 3 cannot be offset to pay federal debt. So if you owe IRS taxes from previous years, your EIP 3 would not be interrupted to pay those federal debts. If you have a debt with another agency, perhaps a balance due with another federal agency, then this EIP 3 could not be offset to pay that amount. However, the legislation only states that for federal debt. So there is a possibility that people who have state debt or that a private company may come in and charge that amount. The legislation and the way that the IRS has published the guidance is that EIP 3 cannot be offset to pay federal tax debt or other federal debt. I hope that makes it clear.
Great. Thank you, Annabelle, for breaking all that down. I know it can be kind of confusing. For those who may not be clear with all this, the EIP 1 was the first $1,200 payment that you should have received last year. The EIP 2 was the $600 one that you also should have received last year. And then this third one that was just sent out a month or two ago and is still, I think, are they still being sent out as we speak, Annabelle, or have most of those gone out?
Yes, Jacob, 164 million payments have been issued from the third round EIP 3 so far. However, there are still people that are waiting for their third stimulus payment, and the IRS does have until December 31st of this year to issue EIP 3. So we will continue issuing these payments out to folks who have not yet received them. Maybe there's been, an issue with their tax filing and it's holding up the issuance of the payment. Whatever the case may be, we will continue distributing those throughout the year. But so far, we've sent 164 million of these payments out to eligible individuals.
Great, thank you for that. Okay, so with that, I'd like to turn it over to Mark for a question about the Golden State stimulus. Mark, can you tell me how much a taxpayer who qualifies for that should be expecting? And then how can they go about checking on that status / resolving any issues that they may have on that front? If they haven't received it yet, what can they do?
Well, so let's start with the amounts. So it's either $600 or it's $1,200, and it is dependent on what your filing circumstances are. So if it's a married filing or a registered domestic partner filing jointly, and one of the persons is an ITIN filer and the other is not, but they claim EITC or Cali ITC, then they can get up to $1,200. The individual who's the ITIN filer would get, or the person with a filing status single would get $600. And as far as resolving, there's really nothing to do to resolve it. Like I've said, we've sent out $2.5 million or 2.5 million payments already. And so it is simply triggered by the filing of the tax return. So, and remember the time frame. So we've already sent out those people who have qualified and filed already. If you haven't filed yet, obviously you can't get that Golden State stimulus check yet. And it will take from the filing date approximately 2 to 3 months, as I mentioned previously, depending on whether you're a electronic filer or file by paper. So I hope that provides the information that you're looking for. Outside of that, if you've waited 2 to 3 months to get your stimulus payment, then you would simply call our general assistance line, which I provided that on the slide, and you're welcome to provide that to anyone on this call. So it's at the bottom, customer service, they can answer that question. Or if you look up above, we do have an online portal called MyFTB. It's something that you can consider signing up for, and you can track all this information there. The stimulus payment is so new for us that it isn't integrated into MyFTB, but we also have a chat feature. And so the chat feature, you can ask general questions, get up-to-date information, or if you have a MyFTB account, you can talk about your account with one of our FTB agents, and they could go over your return with you to see if you would qualify.
Thank you for that, Mark.
Sure.
And just to clarify on that front, so this is the California tax return. So you would need to file, in addition to your federal tax return, your California state tax return to qualify for this Golden State stimulus. So separate tax returns on that front.
Yes, and thank you for pointing that. That's exactly correct.
And speaking about tax filing and tax preparation, I do want to go to our Cal Poly Pomona Vita representative quickly to ask her, Yan, do you, up to what point can folks get assistance with their tax filing and their tax preparation? And also, is there any sort of location requirements for them? Do they have to live in a specific area? Can you provide insight on that?
Because we're doing it virtually, so location really isn't an issue. As long as the taxpayer has a computer or even a phone with a camera access, then we can send them the link of Zoom meeting, then they can just get on Zoom. In terms of the service, we are gonna stop prepare tax returns around the 10th of this month. So around May 10th. Reason being is that we want to make sure that in case we got rejected a return, we have enough cushion room to contact the taxpayer to get the return fixed and re-e-file, or if there's there's enough time for us to notify the taxpayers, let them know that the return is rejected. They have to find other avenues to get their returns filed. We don't want to cause any delays.
Great, thank you for that. So all they have to do is just email you all to see if they can schedule a Zoom appointment, and you'll take care of them from there.
Yes.
Okay, great. Thank you for that. In the chat here, or the Q&A section here, we do have a couple questions about taxation of unemployment benefits and the supplement that people have been receiving last year and also this year, the extra $600. And I think it was also an extra $300 for a while there. Annabelle, I'll turn to Annabelle and Mark on this, but first with Annabelle, can you talk about the federal tax obligation for those payments? And I know there have been some changes on that front too.
Thank you, Jacob. Yes, absolutely. For the most part, unemployment compensation is considered taxable income. That's the way the tax laws work. It's been that way for as long as I can remember. And a lot of the times, folks have an option to ask the state unemployment agencies to deduct federal taxes from unemployment checks. But perhaps many people chose not to have as much of that money, considering the financial hardships of the global pandemic. Other people were not aware that they could get those federal taxes withheld from each paycheck of unemployment compensation. For whatever reason, Jacob and Congressman Torres, there were many folks who were surprised at tax time to learn that, their only income last year was unemployment compensation, and suddenly they were faced with a tax bill. So here's what happened. Many people went ahead and filed taxes and did as they should, which was include this unemployment compensation as income. And they went ahead and paid taxes owed based on that amount that was reported. And then the American Rescue Plan Act enacted on, which was enacted on March 11th, deducted or excluded $10,200 of unemployment compensation from taxes. This means that for individuals who earned unemployment compensation they can now deduct $10,200 of those benefits and not pay taxes on those amounts, and that's per person. So if there's a married filing couple, the $10,200 exclusion would be for each person. For individuals that had already filed and paid taxes on this employment compensation before the passage of the American Rescue Plan Act, the IRS is asking you to not amend your tax return, but rather wait for the agency to go back to your return and make those adjustments. Perhaps after making those adjustments, you'll have a bigger refund that's owed. Perhaps your tax liability will be reduced. And those adjustments are actually happening this month. So we asked for folks that had filed previous to the new relief on unemployment compensation to give us a little bit of time while we go back to those returns and fix those. Now, tax software companies and the tax preparation industry was quick to update its software. The IRS worked really diligently to make sure that these changes were already implemented in our system. So for folks that are filing returns now, the software should automatically deduct those $10,200 in unemployment compensation as soon as you indicate that income was from, in fact, unemployment. So I hope this sort of clarifies the issue, but I guess the message here in summary is $10,200 of your unemployment compensation is not taxable, does not have to be included as income. And so hopefully that will provide relief to individuals who, again, were faced with a tax bill after reporting their unemployment compensation on their tax return.
Yes, thank you, Annabelle, for that clarification. So you said that the IRS is working on doing that this month. What can folks expect if they've already filed their tax returns? Will they get some sort of notice from the IRS? Will they get just a refund if they are owed one in direct deposited or by check? Has that been outlined yet?
I don't have the details as to how exactly those adjustments will be refunded, but for folks that ended up with the tax liability, individuals that usually pay taxes don't generally include their bank routing information on their tax return, because what they're doing is they're having to mail the IRS or pay the IRS online for their tax bill. So individuals that don't indicate their banking information on their tax return, any adjustments will be mailed to the address on that tax return. For individuals that received a refund and may be owed a greater refund and indicated their direct deposit information on the return, then those funds would be direct deposited to those accounts that were specified on the tax return.
Okay, thank you for that. So we'll continue to correspond with the IRS on that front. So as they figure out exactly what is going to go on that front, we, if you contact our office, we can work with you all to get information on that front. So, and we'll post our contact information at the end of the webinar here. So I did want to turn it over to Mark to give an update on, taxable or the tax burden for folks who are receiving state unemployment. Do you have any updates on that front for the state side?
Right. So for California income taxes, the unemployment compensation is not taxable. So it should not pose a problem. The only thing that you would want to make sure is if on your tax return that the amount wasn't subtracted twice, because typically what you do is you file your federal return, and as a part of your California filing, you include the federal return with it. We start with the federal numbers and then we do additions and subtractions. So typically unemployment compensation is considered a California subtraction. And so some of the processing software early on may or may not have picked up on that. And it's just a check item, but so long as you've subtracted it once, then you're just fine, because it should not be included for California purposes. And to the extent that you notice that there would be an error, of course, then you can just file an amended tax return to fix that.
Okay, great. Thank you, Mark, for
Mhm.
that. Our next question here, I do want to turn it over to Susan. Susan, do you have, do you know of ways that seniors can get tax preparation help that maybe isn't as reliant on technology? Because I know obviously some seniors may not have access to a computer, may not have access to Zoom. Do you know of any resources available to seniors who, may want in-person tax preparation or just may need some help on that front?
So there are many of the senior centers, and probably, your senior center uh, did help seniors with tax preparation. They had tax preparers there. It was of no cost, and they were able to help. I don't think that they're offering that now. So I think Annabelle and also Mark had something to say about where you can get help if you still need to get your taxes prepared.
If either of you have any insight on that, feel free to chime in. If not, I know maybe Jan, if you have any insight into in-person services or tax preparation for seniors.
You know what? That's the difficulty or the challenges we're dealing with it during the pandemic, because from the school's perspective, we're not allowed to be even on campus. So to have this like face-to-face is very difficult. One suggestion is that maybe seniors can look into other VITA sites offered by the communities, maybe like in LA or somewhere, because my understanding of all the VITA programs offered by the colleges or universities are done online.
Yes, and I do, our office is aware, I think San Bernardino County is offering some in-person tax preparation services at multiple locations throughout the county. So if you want to give our office a call, we can help provide some of that information. And I'm sure the county has it on their website as well, but we can help you navigate that front. So I know we only have time for a couple more questions. I do have a question here about, let me see here, it was about stimulus checks. Annabelle, if for those folks who need to report or claim their stimulus checks on this year's or last year's tax return because they didn't receive it in 2020, will they be penalized in any way if they make a mistake when calculating that? Because I know that maybe a check was lost in the mail, maybe they didn't receive it somehow. How does the IRS reconciling those economic impact payments that people are claiming on their tax returns?
Thanks, Jacob. And you brought up a very good point, because there's been some concern about tax returns taking a little longer to process this year. Well, that would certainly be one of the reasons, because the IRS is having to go back and verify that the amounts reported on line 30 of the Form 1040 regarding economic impact payments do in fact match what's in our system in terms of what we issued and how we calculated that. So there's no need to file an amended return unless the person completely forgets to claim the recovery rebate credit. If you claim the recovery rebate credit and enter an amount that's different than what you actually received as an economic impact payment, the IRS should be able to make that correction. But if you completely, omit the information, or if you do not claim the recovery rebate credit, then you have to file an amended return to claim that credit. And Jacob, if I may add, based on the previous question, the IRS on our website, irs.gov, we have a VITA locator tool, which allows people to enter their zip code and it connects them with a VITA center near them. We also have tax counseling for the elderly, another program that the IRS partners with. And so folks that need to find an in-person volunteer income tax assistance center can really also check on irs.gov, and based on their zip code, they'll be able to find the centers and phone numbers they can call to see who's taking in-person appointments. I just thought I'd add that in there.
That is very helpful.
Can I add something to that as well? So whenever that occurs, they do consider the California return at the same time, and they will generally prepare both returns for you. I happen to be a volunteer, and what I did notice this year is things have changed, but there have been some in-person appointments and there have been virtual appointments. And so there's just this kind of hybrid of how we're doing it this year. And I don't necessarily represent VITA, but I am a volunteer, and that's just my personal observation.
Great, thank you, Mark. Yeah, so there is a senior that you may know. Feel free to try and help them find a VITA appointment, an in-person one if they want it. I know obviously using locators and things like that are really helpful, but sometimes maybe they won't have access to that. So with that, I think we have time for one more question before we wrap up here. And with respect to seniors, real quickly, Annabelle, if they did not receive their, let's say they're on Social Security, they don't usually file tax returns and they didn't receive for some reason their stimulus payments last year, is that something that will require them to file a tax return this year?
That is correct. So for the purpose of claiming amounts not received under the economic impact payment, you have to claim the recovery rebate credit. And the only way to claim the recovery rebate credit is by filing a 2020 tax return. Now, this doesn't mean that they'll have to file a tax return next year to get EIP-3, because EIP-3 is currently being issued based on information that we are obtaining from the Social Security Administration, from Veterans Affairs, from the Railroad Retirement Board. But for the purpose of EIP-1 and 2, a 2020 tax return is absolutely required to claim the recovery rebate credit for those amounts if they never receive them.
Great, thank you for that. And with that, I think we're just about out of time. I don't want to keep our panelists or our folks on here for too long, but I am going to put up our office's contact information here. If we did not get to your question for any reason, feel free to give our office a call. Reach out to us through our website. We're happy to help you navigate some of those questions that you have. I do want to turn it over really quickly to Congresswoman Torres to give some closing remarks. And again, we thank all of our panelists here for being a great resource.
Jacob, before I go through my remarks, I just want to clarify one thing with both Annabelle and Mark, and that is for you to state the ways in which the IRS or the State Department will contact you if they have a question on your return. The reason why I think that is so important to clarify here is because there's so many attempts to scam, especially our seniors. We want to make sure that they understand there is only one way that the IRS will contact you. And Annabelle, if you would please give us that information. I know you said it earlier. I just want you to reinstate it for us.
Yes, Congresswoman, thank you. Very great point. The IRS will not generally will not call you, send you any social media requests, any text messages. The IRS will mail a letter through the U.S. Postal Service whenever we need to get a hold of you. Now, there are exceptions. For example, if somebody, Congresswoman, contacts your office with an IRS matter and that case comes to my desk, then we would go over with you and the constituent and the caseworker the procedures by which an IRS person may contact them based on the inquiry or the issue at hand. But in general terms, the IRS, the agency itself will not call taxpayers or will not threaten or make any type of demand over the phone. And yeah, a letter is the way we communicate through the U.S. Postal Service.
Thank you, Annabelle. What about you, Mark, from the Franchise Tax Board?
And it is very similar from the Franchise Tax Board's standpoint. In fact, what we do provide on our website are common notices. And so if you ever have a question about it, then you can go to our website and match up your notice with the one that is on the website to just verify that. Also, all of our notices will have a contact phone number, so you can verify that phone number, and we have a return mail address. And so, and you're always welcome to call our 800 number to clarify whether you've actually received a notice or not.
Thank you so much for that. And I want to thank everyone who's taken the time to join us today, specifically our great panelists, our experts in this area. Thank you for making sure that our residents across the Inland Empire have the information that they need on how to file their taxes right now. If you have additional questions after this webinar, I want you to know that my office is there to help you. Visit our website, torres.house.gov, to see the various resource guides that are available right from the homepage, from testing sites to mental health support to information about local utilities. There's a variety of information there that you can view. And while you're there, sign up for our daily newsletter on coronavirus updates. The best way that we can stay safe right now is to stay informed. So we send that email every single day. Thank you again for joining us. If you cannot get online to visit us online, you can also call my office at 909-481-6474. Thank you again. Don't forget, get vaccinated if you haven't. Help your neighbors and stay healthy, everyone. Thank you.
Thank you, everyone.
Bye-bye.